Stop panicking over 22-year-old millionaires. If you are 28, making $62,000 a year with exactly $0 to your name, you probably feel like a complete failure. But mathematically, the actual median net worth for your age is just $6,689. Having a clean slate puts you ahead of millions who are currently drowning in debt just to look rich. The algorithm is lying to you about what normal looks like. Here is the exact net worth you actually need by age 30. Drop a comment. What is the dumbest purchase you financed on a credit card or payment plan just to keep up appearances on a weekend trip? I will read every single one. Before we get into the math, I need to be completely clear with you. I am not a licensed financial advisor, and everything we talk about today is for educational purposes only, meant to challenge how you think about your money. The numbers I am going to show you are based on historical averages, and past performance in the market never guarantees future results, so you should always talk to a qualified professional before making big changes to your finances. Okay, let's look at the reality of what keeping up is actually costing you. You did everything society told you to do. You got the degree, you landed the marketing job, you grind out your 40 hours for $62,000 a year, which is actually above the national median income of $54,000 for your age bracket. You proudly guard your 720 credit score. You never miss a minimum payment. But beneath that responsible surface, you are exhausted. It hits you at 2 a.m. The blue light of your banking app illuminates the ceiling of your apartment. You swipe down to refresh, praying the rent check cleared before the utility auto pay hits. You swipe over to Instagram to distract yourself, and there it is. Someone 3 years younger than you just closed on a house. The next story features a pier in Tulum. The following is an unboxing video. Your stomach drops. I make good money. Why do I feel broke? I am fundamentally failing. The pressure builds in your chest until you do the only thing that relieves it. You buy the concert tickets, you book the weekend trip, you put $400 on an installment plan or your travel rewards card just to feel like you are participating in your own 20s. You tell yourself it is merely splitting a tab, just a small monthly fee to exist in the same reality as your friends. You aren't stupid, you aren't reckless, you are simply trying to survive the psychological warfare of being young, employed, and terrified that the window for success has already closed. Here's the truth that changes everything. The internet tells you the average 20-something has over 100 grand in the bank. That is a statistical lie, heavily skewed by trust fund kids, tech founders, and algorithmic bias. The median net worth, the true middle of the pack for people in their 20s, is just $6,689. Half of the people your age have less than $7,000 to their name. The platforms you scroll every single night do not show you this reality. They do not show you the thousands of young professionals eating leftovers or splitting rent 3 ways. They optimize for watch time by pushing extreme, hyper-aesthetic wealth directly into your feed. They create a fabricated reality specifically designed to make you feel financially inadequate. And waiting right beneath that algorithmic insecurity is the consumer debt industry. This is where the trap snaps shut. They place buy now, pay later buttons and one-click credit approvals directly on the checkout pages of the exact items you are buying to soothe your anxiety. They know you do not have the cash. They do not want you to have the cash. They manufacture the fear of missing out, and then they sell you the debt to cure it. This is not your personal failure. This is their core business model. You are not bad with money. You are the target of a multi-billion-dollar psychological operation designed to extract your future wealth by convincing you that you are already hopelessly behind. Let's look at the actual numbers. The math is violent. Because you feel behind, you use credit to bridge the gap between your $62,000 salary and your algorithm's lifestyle. Let's say you spend $400 a month on credit cards or payment plans to maintain that baseline of dinners, concerts, and trips. But you aren't just paying $400. At the current average credit card interest rate of 22.75%, your rolling balance means you are bleeding an extra $75 a month in pure phantom interest. You are literally paying banks a monthly subscription fee just for the privilege of looking successful. That is $475 vanishing every 30 days. What if you stopped? What if you took that exact $475? What if you deleted the apps making you feel poor and redirected that cash into an S&P 500 index fund? Assuming that fund returns a historical inflation-adjusted 8%, the entire trajectory of your life shifts. In 10 years, that money becomes $86,919. That is the down payment on the house you thought you would never own. But if you let it compound for 20 years, that exact same monthly capital becomes $279,833. That $400 flex to impress people you don't even like is costing you over $250,000. The individuals you see online driving luxury cars are showing you cash flowing out of their accounts. True wealth is invisible. It is the index fund compounding quietly in the background. By trying to buy visible status today, you are permanently destroying your invisible wealth tomorrow. That isn't a pair of shoes or a weekend in Miami. That is 6 years of your retirement you just handed to a bank. Now, to be fair, there are situations where spending money on experiences in your 20s is completely valid. The memories you make right now have a massive return on experience that you cannot replicate at age 60. The fatal trap is not taking the trip. The trap is financing that trip at 22% interest, permanently handicapping your financial foundation for the rest of your life. You might be thinking, I will just wait until I am 35 and making 6 figures to start saving. I will just catch up then. This is the deadliest misunderstanding of how money actually works. It ignores a structural law of finance called the time value of money. The financial system does not just reward how much you invest, it disproportionately rewards exactly when you invest it. Because of compound interest asymmetry, a single dollar you invest at age 25 is mathematically worth roughly 4 times more than a dollar you invest at age 45. When you intentionally delay investing so you can pay off high-interest lifestyle debt, you aren't just pushing your retirement timeline back a few years. You are actively destroying the mathematical exponent. You are firing the invisible employee that is supposed to do the heavy lifting for you over the next 3 decades. If you wait until you are 35 to start building wealth, you will have to contribute exponentially more of your own physical labor, your own sweat, and your own hours to reach the exact same number you could have hit with a fraction of the effort today. Time is the one asset the financial industry cannot lend back to you. And right now, you are trading it away for temporary aesthetic approval. How do we break out of this matrix? We stop measuring ourselves against an algorithm and we start executing the 30-year-old baseline protocol. Fidelity Investments, one of the largest asset managers on earth, has a remarkably boring, highly effective rule for financial survival. You need exactly 1 times your starting salary saved and invested by your 30th birthday. That is it. Here is exactly how you execute the protocol today. The first step is the unfollow audit. Open your phone and unfollow every single creator or influencer who makes you feel financially behind. They are an active threat to your net worth. The second step is the calculation. Write down your current gross salary. If you make $62,000 a year, your exact mathematical net worth target for your 30th birthday is $62,000. You do not need $1 million. You just need to hit your baseline. The third step is the gap math. Subtract what you currently have saved from that $62,000 target. Divide the remaining number by the months you have left until you turn 30. If the math says you need to invest $800 a month to hit the target, you automate that transfer to happen the exact morning your paycheck hits. You pay your future self before the lifestyle industry can touch a single cent. Financial freedom isn't flying private at 25. It isn't a curated grid of luxury vacations. Financial freedom is nervous system regulation. It is the quiet, unbreakable confidence of waking up on a Tuesday morning and knowing you own your own future. It is the immense power of being invited on a weekend trip you cannot afford and saying no without a single drop of guilt or shame because you know exactly what your math is doing in the background. Run your numbers, set the automated transfer, and go live your actual life. But calculating that you need to save $800 a month is only half the battle. If you leave that money sitting in a standard checking account, inflation will slowly eat it alive. You need to know exactly how to automate it and exactly which index funds will do the heavy lifting for you. Click the video on the screen right now, and I will show you the exact pay yourself first system to put your wealth on autopilot. I will see you there.